Why every country wants digital money now. From the bustling streets of New York to the tech-savvy cities of Asia, one global trend is uniting governments and central banks alike: digital money. But we're not talking about Bitcoin or Ethereum. We're talking about central bank digital currencies, CBDCs. Why is nearly every country in the world racing to create its own digital currency? What's really going on behind the scenes of this digital revolution? And how will it impact your money, your privacy, and your future? Welcome back to News Nexus, your trusted source for deep, insightful analysis on global finance and technology. Today, we unpack why every country wants digital money now and what it means for all of us. Let's start with the basics. Digital money isn't new. We've been using it for years. Think PayPal, Google Pay, Apple Pay, or online banking. But these are all private systems built on top of traditional currencies. The actual money is still issued and controlled by central banks. But with CBDCs, or Central Bank Digital Currencies, we're entering a new era. These are digital versions of national currencies, created, issued, and managed by governments themselves. Imagine your country's central bank giving you a digital wallet, and instead of physical bills, you hold digital tokens directly from the central authority. It's like cash, but fully digital, programmable, and traceable. So why the rush now? Several key reasons. 1. Decline of cash. Fewer people are using physical money. In Sweden, less than 10% of transactions are in cash. The pandemic accelerated this shift globally. 2. Rise of cryptocurrencies. Bitcoin showed people that money could exist without governments. Central banks got nervous. If too many people shift to private or decentralized coins, central banks lose control over monetary policy. 3. Financial inclusion. CBDCs could bring banking to the unbanked. Over 1.4 billion adults globally have no bank account. A simple phone with a government-backed wallet could change that. 4th, geopolitical pressure. Countries don't want to be left behind. When China launched the digital Yuan, the US, EU, and others saw it as a power move, a challenge to the dominance of the dollar. So now, over 130 countries, covering 98% of global GDP, are exploring or developing their own digital currencies. CBDCs can be designed in two major forms: retail CBDCs, for everyday use by people and businesses. Think of paying for groceries, rent, or bus tickets using a central bank app. Wholesale CBDCs, used by banks and financial institutions for faster, more secure interbank settlements. They can be built on traditional databases or blockchain-like technologies for better security and transparency. But unlike crypto, they're centralized, fully controlled by governments. Some are even programmable, meaning conditions can be coded into the money. For example, stimulus funds that can only be spent on groceries or that expire in 30 days. That's powerful, but also raises big concerns. Let's look at the pros. Financial inclusion. Especially in developing countries, digital wallets can bring millions into the financial system. Faster transactions, instant payments 24/7 without relying on private payment processors. Reduced costs, lower fees for remittances and money transfers. Improved transparency, less room for corruption and money laundering when transactions are traceable. Better monetary control. Governments can manage inflation, distribute stimulus, and track spending patterns in real time. For central banks, it's a dream come true. For citizens, it depends on how it's implemented, but with great power comes great responsibility and risk. Privacy issues. If all your transactions go through the government, what happens to your financial privacy? Surveillance state. Some fear CBDCs could be used to monitor, control, or even block certain purchases. Cybersecurity risks. If a digital currency system is hacked, it could crash economies overnight. Disintermediation of banks. If people keep their money directly with central banks, commercial banks might lose deposits, affecting loans and credit availability. Digital divide. What about those who don't have smartphones or internet access? These aren't just technical issues, they're ethical, political, and societal. Let's take a quick global tour. China. The digital yuan is already being used in pilot cities. Citizens get red packets of digital cash for festivals. It's fully integrated with mobile apps. India, the digital rupee launched in 2022. The Reserve Bank of India is running retail and wholesale trials. Nigeria, the naira, launched in 2021, the first CBDC in Africa. Adoption is slow, but it's paving the way. European Union, the digital euro is in development. The EU is taking a cautious approach, emphasizing privacy. USA, the digital dollar is still in research. The Federal Reserve is cautious due to privacy and political concerns. Each country is tailoring its approach based on its unique political, economic, and technological landscape. The big picture? We are entering a new era of programmable money, where cashless could become controlless if not handled right. In 5 to 10 years, you may no longer carry a wallet or card. Your national digital wallet could connect you to everything: bills, taxes, IDs, health records. But the balance between innovation and surveillance will define how free or controlled our digital lives become. Will CBDCs empower people or governments? Will it increase transparency or control? The answer lies in how these systems are designed, governed, and debated today. So now you know why every country wants digital money and how it might shape the future of civilization itself. What do you think? Will CBDCs improve the world or create a new form of digital dictatorship? Drop your thoughts in the comments below. Don't forget to like, subscribe, and hit the bell icon so you never miss deep dives like this. This is News Nexus, and we'll see you in the next one, where we decode the world, one headline at a time.